Hey everyone, and welcome back to the Profitable Rental Podcast by Landlord Studio, where we explore the 6 building blocks of real estate profitability. And this is all about helping you to maximize and grow your rental portfolio. I'm Logan Ransley, again, the co-founder of Landlord Studio. We're a property management and accounting software designed for small to medium-sized landlords who are growing their rental portfolio and want to start to automate a lot of the day-to-day jobs, including the accounting aspect and management side of the business. In today's episode, we want to explore the importance of insurance, or landlord insurance particularly, when it comes to scaling your portfolio and what investors need to know about landlord insurance in order to ensure that their portfolio is protected against unforeseen circumstances and all those possibilities that might come up. And to help us dive into this topic today, we've got a special guest called Max McClure from Steadily. Max is Chief Underwriting Officer at Steadily, an insurance company that has successfully disrupted the insurance industry over the last few years, particularly in the landlord space. Welcome, Max. How's it going?
Yeah, thanks, Logan, for inviting me. Hello, everyone. Look forward to the lively discussion on insurance. Not your typical, conversation you want to have early in the morning, but hopefully everybody's got their coffee and is ready to go.
Love to start off just before we sort of kick into the podcast episode. I always ask my guests on this podcast their favorite quote, and it sort of just helps to set the scene about who you are and what's important to you. But what's your favorite quote and why?
My favorite quote is from a Charles Dickens novel, and it is, "Have a heart that never hardens, a temper that never tires, and a touch that never hurts." And what I really like about that quote is you can apply it to many different aspects of your life, whether it's, leadership, whether it's as a husband, as a father, as a son, as a friend. I think that quote is a really good guide to a lot of different aspects of life.
I like it. Charles Dickens, good author. Love to sort of dive into Steadily a little bit before we kind of start. Obviously mentioned that Steadily is an insurance company sort of disrupting the insurance space, but give us a 30-second pitch or a bit of an overview of who Steadily is and what your team does and why it's important, especially for landlords sort of growing their rental portfolio.
Sure. So Steadily is focused exclusively on insurance for landlords and rental property owners. The industry has largely been stagnant for the past 30 to 40 years, and it is in desperate need of more speed, automation, ease of use. All of the founders of Steadily were landlords before founding it and saw the gap in the market. They had seen how the industry had made a lot of progress on auto and on homeowners and saw the need for that to extend into rental properties. And so that's what we're focused on. We're focused on being the best direct landlord insurance provider in the world.
Nice. I see you've done a recent raise as well and scaling the team up, and congratulations on that. Sounds like a lot of stuff is going really well for you guys, and it's exciting to see sort of the space being disrupted and streamlined, particularly for, maybe landlords that have had bad experiences with insurance companies before. So that's awesome. Sort of want to start to dive into Steadily's role and how you sort of approach the space. I guess I have a question around the sort of technology or the process that typically take landlords through in comparison to, say, other sort of insurance providers, and this role that Steadily sort of played with partnering with tech companies like Landlord Studio, etc. Love to sort of hear your view on how sort of leveraging technology has helped sort of provide a really customized and personalized experience to sort of secure the best deals for landlords. How does that work, and how has that been really important part of Steadily's growth and business model?
Great question. So I'll start with explaining what my role is at Steadily. So I'm as you mentioned, the Chief Underwriting Officer, which is a big fancy term for keep Steadily profitable. And so my job is to make sure that we're selecting the right risks, the right homes, and we're pricing them correctly. And the great thing about a technology company like Steadily, who leads the technology, it not only leads to a great customer experience, but it also leads to a lot better price segmentation. And so what price segmentation means is that we're able to customize the price of our insurance to a much more granular degree than the kind of incumbents, the people that have been in this space for a long time. And the reason that we're able to do that is because of the technology we have, the caliber of engineering talent that we have in-house. And effectively, what we're able to do is we're able to price stuff better to give our customers the lowest price possible. And so how that plays out in real life is we have all these different partnerships with property management companies, systems, all these vendors that traditional insurance companies would probably struggle to integrate with from a technology perspective. But we're not only able to bring that into our own systems, but we're able to price on it too. So that is a huge differentiator for us, and it has led to our, a very competitively priced product that's helped us, like you mentioned, finish raising our Series B in the last couple of months. So we're very proud of that, and price segmentation is a huge piece.
Amazing. And how does Steadily's approach sort of differ from current industry players? Like, what's the sort of experience that a landlord could experience as they're going through this process to get landlord insurance from Steadily? How does it sort of compare against what they're typically familiar with or would usually go down?
We are obsessed with the idea of exceptionally fast white glove treatment when you're coming to buy insurance from Steadily. When you compare getting a quote from Steadily in 2 minutes or less to the companies that have been in this space for decades, it can literally take days, and even some cases, if you've got multiple rental properties, weeks to get quotes. And in both of those scenarios at Steadily, you're talking about minutes. And you have help immediately available if you need it to walk through your quotes and discuss coverages. And that is the principal differentiator for us.
And sort of to divert slightly, when landlords are thinking about insurance, more thinking about as their portfolio grows, how important is it to start to encompass landlord insurance into their portfolio? Like, what are some of the benefits and why are they very important to consider when you're either maintaining or streamlining your current portfolio or sort of looking at the future to grow your portfolio over time?
Yeah, I mean, I think all real estate investors know that insurance is going to be an expense when they're looking at whether or not to invest in a rental property or not. And all investors are used to saying, like, what is our, how risky is this purchase of this rental property? Like, that's a general question that every real estate investor is going to ask themselves. You have to have a similar conversation with yourself on insurance. It's how good of insurance do I want to buy? Like, how high of a deductible do I want to have? It'll save on money, but I may be out of pocket if an event happens, like a hailstorm or a fire, whatever it is. So you have to ask yourself, what is your risk tolerance for insurance? Once you decide on that, you'll, generally speaking, be able to get a range of what it's going to cost. I think that most of that's going to be pretty intuitive to most investors. What's less intuitive is really where the industry is headed. And so we are in, I'll nerd out on you for a second, so forgive me. We're in what's called a hard insurance market, which means that premiums are kind of rising across the board. So if you have, if you've been looking at a rental property or rental properties over the last few months and you've priced out insurance, we are in an environment where rates are increasing pretty rapidly, and it doesn't really matter where you are. It's more exacerbated, like in California or Florida, Texas, if you're looking at those areas. But generally speaking, the market is moving up. So it probably needs to be, if I was a real estate investor and actively looking for something, I would be factoring in those rates going up probably 30 to 40% over the next couple of years.
Yeah, and I think this sort of goes into the whole economic sort of shift, and particularly around mortgage rates and interest rates going up, which sort of leads me into a question around how does insurance play, like what sort of role does insurance play when it comes to mortgages, and how does it affect the relationship between the investors and those real estate investors, etc.? How does that whole sort of insurance piece fit into that process itself?
Generally speaking, if you're going to have a loan, your mortgage company is going to require you to have insurance. And they're not only going to require you to have insurance, they're going to require you to have a certain amount of insurance with a reputable, financially stable insurance company. So your mortgage companies will verify, okay, did you buy insurance from somebody who has an acceptable financial stability rating, or is this some insurance company that could go bankrupt in a year? So they do their due diligence in the back end. Fortunately, Steadily, we are very, very financially stable. We have never run into an issue with ratings, but that is something that you have to consider when you're buying insurance. If you have a too good to be true quote, on insurance, that sometimes is a red flag that you may want to dig a little bit deeper.
Does it impact the type of entity structure that you're in? Say you're in an LLC, or you've got your properties owned individually, S corps, etc. Does it matter what sort of insurance or the choice of insurance and how it covers those different entity structures? What's that process sort of look like?
So I think the long and short of that is it's complicated. So it depends on what's going on inside that business entity. So if you've got an LLC or a corporation, and maybe it exclusively is the vehicle you use to invest in rental properties, generally that's going to be very straightforward. If you're using a business entity to own your rental properties, and it also, I don't know, is a computer dropship business where you're sending computers all over the country, like there can be an issue there where you need to make sure that you've got all the right coverages in place. The landlord insurance is not there to insure your business or the other operations of this entity that you formed. So you really want to make sure that you've got all those coverage gaps. You've discussed all those coverage gaps with an expert, because if there's a lot of different operations under that entity, then you may need to buy other types of insurance too.
And we've heard a lot about umbrella policies, etc., and sort of how they weave its way into those different entities. And I guess for the listeners, when they hear this term umbrella policy, and how does that sort of apply to their real estate business or portfolio? Obviously,
I'm an insurance nerd, but I am a huge proponent of umbrella policies. And I'll tell you a story that'll emphasize why I click this. I have a friend of mine who owns some rental properties, and he called me one day and was like, "Hey, Max, I drove up to my rental property on, I think it was New Year's Eve, and he saw his tenants, I don't remember why he was there, but he saw his tenants shooting Roman candles onto his neighbor's roof." You don't know what Roman candles are, they're fireworks. And he was like, "What would happen if they had, caught that house on fire and it burned down?" And I was like, "Well, I don't know what would have happened, but it wouldn't have been good." And he was like, "Can you look at my insurance?" And I was like, "Sure." And he sent it all to me. And I was like, "You need an umbrella policy," and he bought it that day. So that's just like one relevant example that I've come across where you should have it. But I mean, umbrella policies are not expensive, and they give you a ton of extra protection. So if you're a real estate investor and you've been on the fence about buying one, I mean, it's honestly a no-brainer. They're not that expensive. They give you a lot of extra liability. So to get in depth a little bit more, if you've got, let's just say $300,000, $500,000, $1 million of liability limits on your rental properties, what an umbrella policy does is whatever limit you purchase, that sits on top of the liability that you've already purchased. And so it protects you to a greater degree from any sort of like severe incidents that could happen. You're trying to insure away severe catastrophic.
I guess it's similar to sort of public liability insurance in a company, but obviously in this case it's related to rental properties. Just sort of diving a little bit deeper into, I guess, insurance, particularly for real estate. There's a lot of different types of insurances, whether they're, tenant insurance, home insurance, rental insurance, landlord insurance. In the case or the context of Steadily, what should they be considering when it comes to choosing the right policy for their house or their rental property specifically?
I'll just do a quick summary of the basics of those three types of insurance you just mentioned, then I'll get into some nuances. So homeowners insurance, intuitively, is to insure your house and your personal liability. So whatever, not only what you do at your house, but even what you do elsewhere. Not necessarily in your car, that's insurance, that's car insurance, but it will insure you for certain things that you do off of your home, which is really important protection. Landlord insurance, which is what Steadily focuses on, tends to be more liability just for what happens on that premises. So if somebody slips and falls, if there's a dog bite, those are the kind of things that a landlord policy will typically cover. Rental property insurance is more for just a tenant. So whatever stuff the tenant has inside a home, there's typically personal property coverage to cover those objects inside the home, and then it'll provide liability coverage for the tenant. And so Steadily focuses on the landlord rental property insurance, but we also have a specific product if a landlord occupies part of a home, a dwelling. So if you're a landlord, you live in one unit of a triplex and you rent out the other two, Steadily has a specific product where it will combine the elements of the homeowner's insurance with the landlord insurance, so you kind of get both the protections you need, which is actually pretty rare in the market. So if any of your customers have that dynamic, they should definitely reach out to Steadily, because it's pretty unique.
Just kind of going back to that original question that I sort of had, and how Steadily is sort of disrupting this insurance space. As a sort of final question about where the industry is going generally, what are some of the trends and innovations that you've seen or will expect to see in the field of landlord insurance that might be coming over the next years, or what are some exciting sort of upcoming things that Steadily is working on?
Yeah, so the exciting thing about Steadily is, yes, we are very focused on landlord insurance, but once you're actually in this space, there are so many subcategories of customers that today the solutions that are available to them really aren't that great. They're kind of like the industry is saying there's one type of landlord, but we all know that's not the case. So some of the more nuanced work we're working on now is around, I'll give you an example, ADUs, additional dwelling units. And so there's just like new thing that's going on in a lot of urban areas where a single lot is basically being divided to where there's multiple dwellings built on that. And they even, there's also creative solutions where there's a condo association that's created to kind of facilitate this legally. And so Steadily, we're actively working on this now to where we have a custom product for those types of ADUs. So you can have a landlord who owns one of those units on this parcel, and there could be 10 others that are owned by other people. And in practice on insurance, it gets kind of tricky on how we protect the interest of our insured, but we're working on that now. So if you have any customers that are in that situation, we have a product that's coming out soon.
Where can people find out more about Steadily? Where should they go? Where can they learn about this product that you're offering?
Yeah, Steadily.com. You can come in and you can try and you can quote your business yourself if you want to bind it and do all that on your own. If you want some expert help, then you can use our chat feature, or you can give us a call, and a smiling face will take the call and help you.
Awesome. And also Steadily is available inside Landlord Studio as well. We obviously surface that up when you add your properties, and we can give you a instant quote actually within the product. So it makes that whole process a lot easier. So that's it for today's episode of the Profitable Rental Podcast. Absolute privilege having you here, Max. And yeah, really good to just dive into the world of insurance and give some nuanced advice and insights about how this all works for landlords, either scaling their portfolio or considering landlord or changing to landlord insurance with their existing portfolio. So if you like this episode, everyone, give it a like, give it a share, subscribe to our channel. We'll do a write-up on this as well. And we'll also share some links to Steadily where you can go check out their website and products as well. And also follow us on social media. Look for us at Landlord Studio on all platforms. We'll share some more tips in the coming weeks on how to scale and make your rental portfolio more profitable. So yeah, stay tuned for the next episode of the Profitable Rental Podcast. And until next time, have a great week. Appreciate your time, Max, and thank you again for coming on the podcast.
Thank you, Logan. Appreciate it.